These markets, in a sense, to me, have been reminiscent of those days on the floor of the New York Stock Exchange where you saw these huge gyrations that we couldn't even imagine in the midst of the financial crisis. Big ups, big downs. Why the fear right now?
Yeah, you know, Aaron, it's like old times, and it's not really a good thing. You see these big moves in the market, and you know, a good rule of thumb is when the problems keep mounting and you need more than one hand to count them, investors are going to become a little bit more fearful. And what we have is a fragile global economy, notwithstanding the strong U.S. economy. But these fears of Ebola are really, you know, weighing on sentiment. And, you know, while the bark is probably going to be a lot worse than the bite, I mean, I think the chances of an outbreak here are very slim. You know, it impacts things, and it impacts economic activity. If you just look at the SARS outbreak in Asia in about 10 years ago, it was a very small and contained thing, but you know, the impact on the Asian economy was geometrically more impactful. So I think that kind of thing, these kind of fears, and until things shake out and there's some certainty, you're going to have volatility in the market.
And certainly something that should bring it home to politicians, the importance of the situation, that it's much more than just a debate over what you do with a border, that it is something that is dramatically affecting things like markets, too. I mean, Paul, you know, today Carl Icahn, famous investor, of course, said a market correction is definitely coming, and that, I guess, definitionally is a drop of about 10% at least. That begs the question, when you're talking about fears of such great unknowns like Ebola, should everyone with a 401k, a pension at this time, consider taking money out of the market?
You know, I don't think so. I mean, you're talking about retirement plans here, and most of that is long-term. So to try and tell people to trade their retirements, I think, is something you want to stay away from. You know, October, again, is the most volatile month historically in the market. So you're going to see big swings just because of that. We were advising clients coming into the month to be on the lookout for increased volatility, and we're getting that here. Now, if I had a big chunk of change right now that would I invest it first thing tomorrow morning, I'd probably hold off on it a little bit to see how things shake out. But I think, you know, if you have more than a time horizon of a few months, you know, I think you would be well advised to stick with your plan.